What is up, YouTube? Today is Tuesday, December 31st. It's actually 15 minutes before the new year, and here I am making a trade recap for you guys. So, today I took 3 trades, and 2 of them were winners. One of them was a loss, and I'll go through each one. But overall, coming into the market this morning, I did have a bearish bias. If you look, we've had this downtrend that we're kind of forming now. We had that big break of structure from FOMC, and then we started to move back on up into OTE, rejected off of that, held that 4-hour FEG right there too, making it seem like it wants to head on lower. We have this 4-hour FEG right here where we absolutely rejected out of as well. And then yesterday for Monday, we kind of just consolidated a bit, but I was still bearish just because the overall order flow is bearish. The biggest thing that made me be super bearish for today is the fact that we had this 4-hour FEG right there that got invalidated. We traded back up. We failed to take that high, and we kind of stay within this area. We create another imbalance right there too. Drop down into the 1-hour time frame, and you see that we have price moving on up into this imbalance right here, rejects off of it, invalidates this bullish one. Starts to come back up. It does invalidate this bearish one, but then we start to fail to take out that high. So overall, it was kind of giving some kind of bearish sentiment, even though there was that consolidation. Higher time frame, we are bearish. Another thing to note is that this does look like a buy model into a sell model, and I believe that the draw on liquidity for this week is that 21,007 level. I'm almost certain at this point that we're going to end up hitting that. So for today though, my draw on liquidity was the recent swing low here on the 1-hour time frame. So that was this right here at 21,252.75. So the biggest thing that I wanted to see this morning was if at 10 o'clock we were going to end up being below this 1-hour imbalance. We also had a 4-hour imbalance, I believe. No, we didn't. So it was mainly the 1-hour that I wanted to see this get invalidated to then have the 1-hour time frame also align with the 4-hour that was bearish. But because those two were conflicting, I was kind of hesitant on the first trade. I did want to go with what I was seeing, which was bullishness, right? We had the invalidation of this 1-hour bearish FEG, and then it created a 1-hour bullish FEG. And we dropped and failed to close below that from 9 to 10 here on the hourly. So because we opened here, I figured we were going to open, low, high, close type of deal if we were going to end up being bullish. So I was kind of bullish there. Same thing on the 15-minute time frame. We came on up, and the only thing here on the 15-minute was the fact that we had this bearish imbalance right there that we held. But overall, I wanted to see this one continue to hold us. And it did, right? At 10 o'clock, we were still holding this. So technically here, I was still considering this to be bullish price action. So that's why the first trade that I took was a long. Clearly that got stopped out. So let's take a look at that quickly. That was how I came into it, just because, we came in below these lows and we had a very strong reaction out of it. And then we failed to create a lower low, yes. And so with the fact that we started to move back on up and invalidated this 1-minute bearish imbalance, I decided to enter in on a long right here at the 9:50 to 10:10 macro time frame, and then put my stop below that swing low there, because if it did want to continue moving on higher, there was no reason why it should come to this low. Now, it is important to note the fact that we did sweep that high right there, so that was very interesting to see. And then price comes back on up, and it was like conflicting structure for sure. You could definitely be confused here, just looking at the fact that we have this drop, we have a lower high, then we have a higher low, then we have a sweep and essentially a higher high, but then we have displacement below these two lows, so we have a lower low, and then we come back up and we create a higher high. So here was kind of search and destroy type of action. So you could have taken either a long or short, and you would have gotten cooked. Either way, I think. There was really no good kind of approach to this first macro, which is okay because we know that we have 2 other opportunities in the morning to be able to make that back. So that's totally fine. So that first trade was a loss. Very quick, entered, boom, loss. Next thing that I did was wait for the next setup, which was the 1050 to 1110 macro. At that point, we invalidated the 15-minute fair value gap. As you can see, we're well below that price. Let me go back to the 15-minute time frame just to show it. So here we invalidated it at 10:15. So at that point, I was like, okay, we're definitely bearish. There's no reason why I should be playing longs at this point. And then on the hourly time frame, I was expecting at the 1050 macro to have this candle close below that. So 4 hours bearish, 1 hour is bearish, 15 minutes bearish. We look for a bearish setup on the 1 minute. So let's see. And then on top of that, to add further into it, that bias was here for the 4 hour candle that was printing. We opened, created this high, dropped, and then swept that high and then rejected again. There was no displacement above that 10 o'clock open. So if we are going to be bullish for this candle, if we're going to print a green candle, we want to see a manipulation low, which we got here, and then displacement higher, because you want to see it create that green body and then hitting a draw on liquidity up here and then retracing to create that open, low, high, close type of approach. But the fact of the matter is that we didn't get that. We obviously got an open high and then a higher high, and then we got the low and then close right here. So we were printing a bearish candle. So that rejection of that 10 o'clock open further solidified a bearish bias. So 1050 right here to 1110. That is the next macro session where we can find a setup, either a continuation or maybe it sweeps a high and it's a reversal off of that. So the FEG that I was watching was this one right here. As soon as that got invalidated, I market ordered in, put my stop above that swing high right there, and I targeted this low. Now, I believe I took off the majority of my position, or I think I took all of my position off here at a 1 to 1.5, because, well, it's New Year's Eve. We don't really know what to expect. And so we just want to make sure that we get those gains in. We want to lock in those gains. So then here's that swing high. A 1.5 risk to reward is more than enough. Could have left a runner if you wanted, put it to break even. Obviously that runner would have never hit, and it would have hit a 1 to 4 risk to reward, which is even more beautiful. So that was that trade. Then at the 1150 to 1010 macro, or 1210 macro, same thing, right? We have yet to hit the draw on liquidity. We're just hanging around. We come and we sweep that high right there. This is an obvious bullish imbalance that becomes an IFEG, and we respect it like crazy. And as you can see, taps into it and sells off right into that draw on liquidity. So I took these two trades on one eval, and then I took this trade on another eval. I did not trade my fundeds because I wanted to end the funded accounts green for the year. And these were the these three trades I took on evals. So this plus this ended up green on the day. This one, the account was just green, and this was a 1 to 1.9. Oh, excuse me. And so if I held all the way to the draw, that would have been a 1 to 3. So lots of good setups here on this first three, or these two macros. The first one is not the best, but it is what it is. So now at the 110 to 140 macro, again, you'd want to look for some kind of a bearish setup. And I believe, honestly, I haven't even really looked at the chart yet, but you could have potentially been bullish at the 110 macro, I believe. No, not really, because this one was at 115. Or actually, yeah, you could have been kind of bullish at the 110 macro because of the fact that we hit that draw and we maybe wanted to retrace back on up onto this price legs premium. And so we did invalidate this bearish fair value gap right there. So you could have potentially been bullish and maybe gotten messed up on that one. Let's take a look what that could have been at the 110 macro. So you might have taken this setup here, but a very weak closure, right? There wasn't very much follow through on that. Matter of fact, let's take a look at the 5 minute, because overall we are very bearish on a higher time frame. So yeah, personally, I would have wanted to have seen on the 5 minute chart a stronger close above that 5 minute FEG. If you notice, it is not holding well. But then again, I wouldn't have traded the 110 macro because I already took these 2 trades and it hit the draw on liquidity. Once price hits the draw for the day, it's kind of difficult to take anything after that. Price will tend to consolidate for the rest of the day if that was the objective that it had. Then for the other sessions macro here, it consolidated. Maybe you got cooked on this one. It consolidated here a bit, and the fact that we did move back on up here, we invalidated this bearish 5 minute imbalance at 3 o'clock exactly. You could have been looking for a bullish scenario here at the 315 macro, which would have been right here, and your entry probably would have been an invalidation of this imbalance or even this imbalance right here. So I don't think the trade would have been a great R to R, honestly. You hit it like you hit a 1-to-1 pretty much, and then would have gotten stopped out. But if you took the invalidation of this one, would have been that entry there, and you would have hit a 1-to-1.8. So you could have taken off right there at a 1-to-1.4. You could have targeted just an RR of 1-to-1.5. But like I said, once it hits the draw, then it's really hard to take anything after that. So yeah, hopefully you guys didn't end up red on the last day of the year. We had some really good setups. We had overall in each macro, this one would have been a loss for me. This one was a loss. These 2 were wins, and this one was a win too, just based off of the model that I use. And yeah, guys, 2025 is literally 4 minutes away from me. And so I hope that, you guys have enjoyed the content that I've put out here on YouTube, and that you guys are finding value in everything that I do. I want to tell you that I love you so much, guys. Thank you so much for the support, and I'm excited to see what 2025 will bring us and how we're going to look going forward. So God bless you guys, everyone, and I will see you all next year. Peace.